Miles Roberts, Chief Executive of DS Smith, and Adrian Marsh, Chief Financial Officer. It's been another year of consistent growth for the business. Miles, what are you most pleased about?
Well, we're delighted with the overall growth, the financial returns, but also the momentum into the current year. So our customers are with us. We've grown our volumes by 3.1% over the last 12 months. That's ahead of the market, and we've grown in every region. We've also invested in the business. During the last year, we've acquired 5 companies, and we're delighted with the response of our customers to those acquisitions. And of course, we've delivered on our financial metrics. Grown profits, grown returns. But as I said, we're very happy with the momentum, the belief in the business. And that's emphasised today by the announcement of further acquisition activity, which again we're very pleased about.
How are the acquisitions going, and how do you balance your time between integrating new businesses and driving the existing business?
Overall, the acquisitions are going very well. We're seen as the consolidator of choice in the market. And the way we integrate, the way we engage with the customers, with all the new employees, is a real strength of the group. So it's been good, but it's a well-honed process. But it's not all about acquisitions, it's about the organic business as well. And you've seen in the last year we've grown 10% year on year in the profitability there. And we're very pleased about that because that's obviously a very important part of our model.
Adrian, if I could turn to you, capital management over the year has been good, but net debt is up a lot. What are the reasons behind that?
Well, as Miles has just described, this year we strengthened our business with 5 new acquisitions, and for that we've paid about £434 million. We remain very focused on managing our balance sheet and keeping our working capital position very tight. For us, it's about earning the right to grow and creating the headroom to grow our business.
Net capital expenditure was £201 million, which is higher than previous years. How is that cash allocated?
Well, to start with, we're a bigger business this year than we were last year. We have very strict financial criteria on how we invest within our business, and where we see opportunities, we do invest. So this year, we've invested around about 35% of our capital on growth initiatives, on growing our business, around about a third on efficiency programs to make ourselves better and to improve our margins through how we operate, and about a third on health and safety, on maintenance, and on IT expenditure, all very important uses of our cash.
Miles, compound earnings per share growth has been 30% since you were appointed as Chief Executive. How are you going to maintain that high level of growth?
Our industry, DS Smith, has a fantastic opportunity ahead of it. If we think about what's happening with our customers, particularly on things like e-commerce, the packaging solution, the ability to add value, the ability for us to grow there is very strong. Of course, we have acquisition as well. We're 15% of the European market. We're seen as the consolidator of choice, so we've got a lot of opportunity there. But most importantly, there's momentum and belief in the company to achieve those 2 objectives of organic and acquisition-led growth.
The economic outlook remains uncertain, but what's the outlook for DS Smith?
Our overall outlook is positive. The economic situation has been uncertain, is uncertain, and probably will be uncertain going forwards. But we're very clear on what our business model is, satisfying the needs of our big FMCG customers. The demand's very consistent, we're growing our share, and there's a lot of ability for us to continue adding value.
Well, as we've seen, it's been another strong year of performance across the group. Miles Roberts, Chief Executive of DS Smith, and Adrian Marsh, Chief Financial Officer, thank you both very much.
Thank you.